The Fed is letting the cat out of the bag. They're letting the secret out. These Fed governors start talking, and they're starting to admit that, yeah, we're gonna have to lower rates. We're gonna have to lower interest rates. They are basically admitting right now that they're worried really about sticky inflation. So that's what we're going to talk about a little bit here, and then we're going to get into your Q&A questions on today's show. Welcome, everyone, to the show. Thank you guys so much for subscribing. So we got some really interesting data over the past week from the Fed's minutes in their meeting on Wednesday. But then even later, of course, more data started coming in about where the Fed is going. And if you look right now, what the market believes is going to happen, we are going to see rate cuts hitting likely by September. That is what the market believes, and maybe even another rate cut hitting in November. So we are going to see some real pressure on the US dollar in the next few months, because as rates decrease, Americans are able to get mortgages again at a lower interest rate. That's great. But the US dollar, of course, will become less attractive, and people will dump it like a bad habit. They're going to be running, of course, into commodities. They're going to be running back into real estate. They're going to be running into precious metals in a big way. So this is why I think we're about to see a boom in real estate. I've been saying, I thought we would see it in the spring. Didn't look like it happened right now. There's so much pent up demand for real estate, but those interest rates have been staying high, and that's kept the market artificially stagnant for the moment. So I think as we head into the fall, right before the election, they're going to try to give Biden a big win. The Fed will come out, of course, with interest rate decreases. People will start to sell their homes. September is a great time to sell a home. So people are going to be doing that, and you're going to see these interest rates decline. But the Fed is basically admitting something that I think is really important. They are mostly worried right now about stagflation. Okay, this is runaway inflation. This is, high unemployment. This is sort of a sticky, permanent inflation like we saw in the 1970s. And this is going to be a big problem for the U.S. economy. And it could take years to come out of. And that's the last thing they want, a return to the 1970s. Energy prices hitting all-time highs, oil prices at all-time highs. And then, of course, interest rates at all-time highs. They do not want this. And this is exactly what they're trying to avoid. But then, of course, you're going to run up massive deficits, which the United States government is going to continue to print money. So right now, the Fed, I would not want to work at the Fed. They are between a rock and a hard place, and they brought this on themselves, of course, because they kept these interest rates artificially low for way too long. And now we are seeing the chickens come home to roost. So we're going to keep our eyes on these interest rates. I've been watching them very closely to see where these go. But I really think right now Americans are being hit really, really hard, and the Fed is aware of it. The Fed is aware of it, but it's like, what are you going to do? Screw over the U.S. dollar or screw over the American people? And right now, they're screwing over the American people, and the U.S. dollar is a safe haven for a lot of people right now because Europe has lowered its interest rates, and so the U.S. dollar is a place to make some money right now. But something is about to give. And the Biden administration, with the lowest approval ratings of any president in American history, is putting pressure on the Fed right now. You've got to cut interest rates. You've got to cut interest rates to give President Biden a boost into the election. And I think that's exactly what you're going to see. And don't take my word for it. That's exactly what the market is saying, by the way. And this is penciled in right now. They believe rate cuts are coming in September, and maybe even another rate cut by November, and even maybe a third rate cut by December. So we could see a series of rate cuts here in the next few months, just in time for the election. So good news for commodities. It's going to be great news for real estate. It's going to be great news for gold, silver, tin, nickel, copper, all of it. But bad news for the US dollar. We'll get back to the video in a second, but look, your money is not safe. You can see all the time that stocks can crash, bonds lose value. Anything that you can't physically put your hands on increases your risk right now. Hey everyone, I'm Clayton Morris, longtime real estate investor and founder of Morris Invest. And my favorite tangible asset is real estate. It consistently outperforms other asset classes, and I believe it's the number one way to build and protect your wealth. Now, while there are several ways you can invest in real estate, most of which I've tried myself, the build-to-rent model offers the most benefits. More specifically, single-family buy and hold rentals. Here's why. Much lower risk than trying to flip a house. You have more control and higher returns than REITs, if you're investing in the stock market. It's way less work than wholesaling properties if you're into wholesaling. Many fewer repairs and headaches than trying to rehab a property. My company, Morris Invest, along with the help from our partner at Sedera Wealth, helps you invest in build-to-rent properties as easily as investing in stocks. That's because we buy and build in bulk, and then we pass on our savings to you. And when you purchase a property through us, you get discounted pricing on properties at or below market value. Seller incentives like mortgage buy-down rates and credits right now usually lowers your rate by about 1%. And we know with higher interest rates right now, you definitely want that, right? And you get free ongoing customer service for the life of your investment. Get personal phone numbers and email addresses of our team. And build-to-rent properties are in prime growth markets. We're talking 18% internal rate of return. 18%. Amazing tax benefits. And you get a free cost segregation report, helping find strategies that increase tax write-offs. You get principal reduction as your tenant pays down your mortgage. And you get steadily growing appreciation and equity gains. Plus, positive cash flow. We won't sell you a property if the math doesn't add up. If you want to know more, just click the link in the description box and it'll take you to our website where you can book a free call with our team. There's zero pressure, no obligation. Look, I understand we won't be a good fit for everybody, and that's totally okay. Some of you might want to be DIY, you want to do it yourself. That's great. Either way, you're going to walk away from our phone call with some valuable new insights and an idea of what questions you might want to ask and some actionable steps that you can take to move forward in your financial journey. You can always find an excuse to not invest, but the sooner that you start a smart investment like build-to-rent real estate in a strong market, the sooner you'll be enjoying pure cash flow. So click the link below and I hope to see you on our schedule. Today's our Q&A episode where we take your questions from the audience. So thank you guys so much. You can go to our website, morrisinvest.com, and there's a microphone icon on the side of the screen there. Just click that, leave us a voicemail question about anything that's on your mind, about anything in the economy, real estate, whatever. And we will try to tackle it here. So our first question today comes from Craig.
Hi, Clayton. Do I need the LLC for my rental property in the state of the rental property? I'm getting mixed information on this. Thanks.
Thanks, Craig. I'm not a lawyer, and I don't pretend to be one. I would absolutely call the team over at Corporate Direct. I think we have a link on our website under our resources page if you go to Morris Invest. And they're really cheap. I mean, I think they'll even give you $100 off if you tell them you came from us. But they can help set up LLCs very quickly. And you can ask them that question. I know there's a lot of differing feelings about this. I'll just tell you what Natalie and I have always done, okay? Like we are actively buying properties right now in Missouri. That's where we're buying properties right now, and in Texas, that's where our company's building them, and that's where we're buying them in our personal portfolio. So we are setting up a Missouri LLC so that we can own the properties in Missouri in the Missouri LLC. That's how we do it. And then our properties in Texas, we have a Texas LLC. But each of those are just pass-through LLCs, and they speak to our main business LLC, okay, which we have in another state, which I think we have in Wyoming. So they all talk to one another, okay? And these are just sort of pass through LLCs. That's how we do it. We do it to keep it clean, easy in the states where we're filing taxes. The thing is, you're going to have to file taxes in those states anyway, and it's better if you have a business in the That's our personal belief, again, that the LLC is in the state where you have your properties. It just keeps it cleaner, right? Again, you do you. Some people have multiple properties in one LLC. Some people like to buy one property per LLC. And they'll name the LLC the name of the address, 123 Main Street LLC. We've always been believers in having a couple of properties in our LLCs. So again, you do you, but I would definitely seek counsel from the team over at Corporate Direct. They're a legal team. Garrett Sutton, he's a Rich Dad advisor to Robert Kiyosaki and great friend of the show. And anyway, like I said, go to our resources page, and I think you get $100 off if you work with them through us. So just let them know you heard about them through us. Thanks, Craig. Next question, Scott.
Hello, Clayton. Thanks for everything you do. I'm looking for a savvy accountant in the Fairfield County area of Connecticut. Thanks a lot.
All right. Well, my suggestion on that is to go through the Wealthability Network. Okay, this is Tom Wheelwright's company, Wealthability, and I think it's wealthability.com. Now, what Tom has done, he's the smartest real estate tax accountant in the country. He has built a network of like-minded advisors that he's trained. He and his team have trained, so they are top-notch in the real estate space, and they think and act like him, basically. He's created a network of tax advisors, I think, all over the country as part of the Wealthability Network. So I think that would probably be the best solution. Go through their website and find a tax advisor in Connecticut. If you want somebody in that neck of the woods, see if there's anybody local who believes and understands real estate, who understands what we talk about here on this show. And they walk the walk, they talk the talk. So Wealthability would be my suggestion. That's who I use personally. That's who my mother-in-law uses. That's who basically everyone in my family uses, the team from Wealthability and Tom Wheelwright's company. Like I said, we had one in New York City. We had a tax advisor in New York City who we had to fire years ago because he just didn't understand real estate. That's no bueno. How can you save all this kind of money on taxes? If you're a real estate investor, you should be paying nothing in taxes if you do it correctly, right? So how can you be working with a tax advisor who won't walk the walk, talk the talk, Thank you, Scott. Next question.
Hey, Clayton. My name's Jack. I'm 25. I live in Dayton, Ohio. I have a 4-unit building that's worth about $320,000, and I have about $80,000 in equity in the building, maybe a little more. And then I have a single-family home, small. It's about $180,000, and I have probably $46,000 in equity in that property. And I was wondering, my goal is to have 5 properties by the time I'm 30. Like I said, I'm 25 now, just turned 25, and I have 2. I'm about to list this one for rent that I currently live in soon. And I just wanted to ask you, how do I get there? Like, should I look at a HELOC? Does that make sense for me to buy in this interest rate environment? Like, what makes the most sense? Should I just stockpile cash and try to do it slower? I'm just curious about your advice on that. And also, should I just invest in the stock market? I could get 10% in the market. So should I just do that? Curious to hear your thoughts. Thanks.
Thanks, Jack. Well, of course, I can't give you financial advice on where to put your money. But if you're able to get 10% right now, while you're, I always look at if you've got cash on hand, and it's sitting there and it's not deployed, why would you want it to get 0% interest right now in a savings account, right? So if you can get 10% while you're building up enough for another down payment on another property, great. We have our partnership with our friends over at Connect Invest, which would allow you to invest in real estate notes, and you can do it for however you want. If you go through our website at morrisinvest.com/connect, and you can invest for a year, 12 months, 6 months, 12 months, 24 months. You can set the terms on how long you want to invest in real estate notes, and for as little as $500. So that could give you exposure in real estate in a way that you might not have thought about, and you don't need to have 50, 60, 70,000 in order to invest in it. You can do it for a little bit just to get you started, right? Or if you're having success in the stock market with 10%, although of course, if you're paying attention to what Jamie Dimon speaking about last week, sees real volatility. JP Morgan Chase talking about a lot of volatility coming right now on the S&P 500. We could see 20% declines. So be very, very careful about the market if you're putting a huge chunk of change into that space right now. To me, I love tangible assets like real estate. I love precious metals. And you're seeing, of course, commodities hitting an all-time high, and that's only going to go up from here, according to the experts. I'm talking gold, silver, copper, tin, nickel, all of it. Uranium prices. So you do you. I can't tell you what to do with it. But what I would say is to consider what I've always talked about. It's time in the market, not trying to time the market. And it sounds like that's kind of what you're thinking about, is timing the market, right? Should you wait for interest rates to drop, make 10% in the stock market? That's timing the market. And I'm a big believer in, Natalie and I are buying a property right now. And yes, interest rates are a little bit higher than we're used to. Again, I want to be in the market investing in tangible assets that are producing cash flow and getting me to my numbers. And so you can always refinance later. I've already published a couple of videos this week about rate cuts. At the beginning of today's episode, I talk about rate cuts coming. We know that the Fed is being pressured into rate cuts. So you could, acquire a property, refinance. You can even get a new home equity line of credit if you get a better rate from another bank. Shop it around. These are all financial products that you'll be able to shop around. But I would say the way to do it is what you're already doing, is to use the equity in these properties and use the snowball effect. Maybe even consider a 1031 exchange. If you're looking at that property, that single family that you're looking to rent out, maybe it's not the best investment. Are the numbers good? Maybe you would even consider selling it in a 1031 exchange and buying 3 properties. $180,000 for a single family. If the numbers don't make sense from an ROI perspective on the rent that you're going to get to cover the mortgage, maybe it's worth selling it. Again, this is what you need to look at in your portfolio. And maybe the profits from selling it would then enable you to buy 3 rental properties, right? Because now you're at 4 properties, right? You've got the 4 unit and you've got 3 properties that you just bought because you sold off $180,000 property that maybe the ROI isn't there. Now, it sounds like you're holding on to that property because you're used to it, you lived in it, and you have an emotional attachment to it. I just would be very careful. I would really, really run the numbers on that property to make sure that the ROI is there. So like the properties that we do at Morris Invest, the new construction that we build in West Texas and in Missouri, they have a minimum 18% internal rate of return, minimum. Okay, that's with financing built into them. Okay, so really think about where your ROI is with financing built in. You still have a mortgage on the property. If you're like breaking even with and don't lie to yourself either. Like, what are your taxes that you're paying, right? Like, account for everything in that. Your taxes, all of your expenses, how much maintenance you're putting into it. Does it need a new roof this year? Like all of those things. What are your taxes? All of it. And then are you getting a really high rate of return? If not, then maybe you have an emotional attachment to that property. You want to think about selling it. Do a 1031 exchange so you're not getting hit from tax purposes, and then roll that into buying like 3 properties. So anyway, things to consider and look at. Also, if you're interested in home equity lines of credit, my friend Dan Kraus down there at Churchill Mortgage can talk with you. We'll have a link in the description. You can talk with him. Again, he's not an affiliate or anything like that. He just does great work for investment home equity lines of credit. So talk with him and he can maybe point you in the right direction with the best rates right now as well. So anyway, I hope I gave you some food for thought there, Jack. But hey, 25 years old and you already own a four unit. That's amazing. Good for you. I would also, there was something you mentioned about you are listing it for rent. I would also, if you're turning this into a business, seriously consider having a property management team that handles this for you, okay? Because now you're going to be turning this into a full-time job for yourself if you are also the property manager. So again, consider hiring a property manager that can handle this for you. This is not something that you should be doing unless you want this to be your full-time job, okay? Thank you guys for the great questions. Go to our website, go to morrisinvest.com, click on the microphone icon there, leave us a voicemail question. And if you're interested in investing in brand new construction properties with a team that will do everything for you with a minimum 18% internal rate of return, then book a call with our team as well. We're happy to talk with you through the new construction properties that we're building in West Texas and in Missouri, in the Joplin area. And we'll talk you through all of it. We'll show you the properties. You can come visit the team. You can say hello. We'll take you out to lunch and all of that. So thanks, guys. And we'll see you next time, everyone.